Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is March 22nd, 2024, and I'm here to bring you a wrap up of some trades that we've had this week with some of the popular symbols that lots of people like to trade, as well as to talk about some trading levels for the upcoming week of March 25th. 2024 with some of those same symbols. Before I get going here, the usual disclaimers, Precision Trading Labs, we are not financial advisors nor money managers. Everything we do is for educational purposes only. Everything that we do is associated with our subscribers to help them become competent, confident traders. All right, so here we go. Here's a chart of Apple here, and we actually had a nice call uh, uh, buy trade. We had actually gotten it into this a couple of weeks ago, and then we ended up closing it out a couple of days ago. This was based off of a demand zone that we had found that went back in time till right around Halloween of last year. We have a drop, a base, and a fierce rally that came out of here. So this is an area of anticipated future upward price pressure. So um, when price returned to this level, that's where we got into this trade. We had bought a call. We ended up buying the June 21st expiration call, which of course went out about 3 months. But we buy enough time so that if in fact we get stuck in the trade for a while, we're not going to get too beaten up by time decay. We can see here we were in this from the 7th to the 19th. So we're in there for about 12 calendar days, so just a little shy of 2 weeks. So we didn't really get beaten up by time decay, even though we were in the trade for 2 weeks, because we had bought a lot of time. Had we only bought, let's say, 1 month, or even 6 weeks, the effect of time decay theta would have been much greater. So that was the reason behind that. Incidentally, when I talk about these supply and demand zones that are the basis for our trades, those are all explained in a video which you can actually find the link to in the description field of this video. So if you go to that one, there's an explanation that goes into the whole theory of supply and demand and how we use that as the foundation for our trades here. All right. So here's where we are now. Again, we ended up having this nice trade here, and so we ended up getting into that. We had gotten into that at the front door of this demand zone at 168.60, and we ended up getting out here at 178.50. Generally, we're looking to try to get anywhere from 2 to 3 to 1 on a trade, and using the underlying as the basis for the trade here. So that would be a 1-to-1 trade, a 2-to-1 trade, a 3-to-1. So we got out basically a 3-to-1. Our opening premium was 915, and we ended up closing out at 14.25 over here. So that was about a $5 gain, and that's about a 55% gain on a percentage basis. So here's where we are now. Okay, if price would return to this level here, it's already been hit once. It was only grazed here, so it's quite possible this level could work again. But frankly, because of the fact that this thing didn't come out of here with a tremendous amount of energy, it's quite possible that if it fades back here again, it might just drive through this level again. So I'm really not too confident about taking this trade again from the same level. On the other hand, if this thing would bounce and then come up to here, this would actually be a nice area to actually short Apple, or to take or to put on a bearish trade, which of course the most direct route to that, of course, would be to buy a put. So we'd be looking to buy a put at 180.75. So where we are now, that's about a little less than a 5% move to get from here to there. So we'll certainly keep an eye on that. But that's the story with Apple here, waiting really to get up here to short it. Other than that, then there's really no clean demand until somewhat below here. And in fact, right here, here's the 52-week low on Apple. So at any rate, that's what we're looking at there. We take a look at Google. So right here, okay, we got into this trade on a short or I should say on a bearish trade here. Right here we have a rally, a base, and a drop here. This is a supply zone. Again, you can look at the video that accompanies this one. Look at that link, and there's an explanation of supply and demand zones there you can find. So right here, okay, price gapped up here. And in fact, it ended up kissing this supply zone, excuse me, and dropping from here. So in fact, we actually did get into the trade here. We actually only did this at half speed, or a half share size, or half contract size in this case. And the reason being is that this was a gap, and then this thing just kind of raced up here. So rather than putting on, I think, 4 contracts, we only put on. I think I only put on 2 because of the fact that it was kind of scary when this thing came up this way. But in fact, what happened was it just kind of kissed the zone and dropped. Silly me, I probably should have just taken it off right here at 2-1. But I thought that at that point, then there was a good possibility, particularly because Apple had been showing, general, it hadn't actually been contributing much to the the all-time high lately. As you can see, it had been relatively weak here. I thought it might actually fill this gap here. Okay, but in fact it didn't, and it's now kind of gone right back up to this. So this was showing about a $2 gain on that drop down into here, but in fact I did not take it off. So in fact it's sitting right here. So we're pretty much close back to pretty much break even. I think this thing might be have about a 50-cent profit on this. I think this might be worth about 575 at this point. So, but we'll see what happens. So. Right there's the stop if it ends up if things don't go well here. On the other hand, right down here, if we look at a 2-hour chart here, this is a demand zone right here. But that's about 8% down from where we are now. So that's a pretty good distance away. But at any rate, that's the story. That's the story with Google here. And listen, I just realized I misspoke here. It's been a long day. Google's actually been obviously very strong in contributing to the race to all-time highs here. But I was still thinking about Apple a minute ago, so forgive me there. So at any rate, this is where it is now. So we'll see what happens with that. Let's see, taking a look at Amazon. So right here on Amazon, there was no trade, but here's what we're looking at for next week here. So right here, this has been kind of just consolidating and kind of grinding along, but back and forth here, kind of in this congestion area. But about 5% down from here in the 2-hour chart at the origin of this gap here. This would be an area that we would actually be looking to find a bounce here. So that's at around 169 down to about 166.83 with the stop. Incidentally, we use anywhere usually between 10 and 20% of the daily ATR as kind of a little extra wiggle room or a little extra breathing room for the zones that we find. So at any rate, that's where the stop would be on that. So we were looking to get into a bullish trade if we had a pullback to around 169 or so. All right, so that's Amazon. Taking a look at Netflix. Okay, so right here is where we have a demand zone and a supply zone. Both are roughly about the same distance away here. So right here we have a rally, a base, and a rally there. Price has not been back there again. This is where we would anticipate that we would get a bounce here after this little exhaustion of sellers here. And then right above here, if we go back in time, I think, yeah, right there, we have a rally, a base, and then notice that fierce drop that came out of there. This represents the exhaustion of buyers that occurred after that area of consolidation. So when price returns there, we are anticipating that there is some downward price pressure to be tapped there because of the fact that all that's left there is supply there. There is no demand in that level anymore. And so if there's supply there, we would expect to see a push down there. So right now, of course, we're sitting pretty much midway between levels here. So that's where we would anticipate a bearish trade. Right here, we would do a bullish trade. And in fact, if you're into options and collecting premium, this is actually an ideal scenario for actually writing. Potentially, might actually be a good region to actually write an iron condor. Depending on where we'd have to see what the premiums would be like and what, how far out we would have to go. But the ideal scenario for an iron condor is to actually be able to kind of have a short strike down here on the puts, and have a short strike up here on the calls, and then utilizing these zones to actually protect the short strike. So this is actually potentially an ideal scenario. I haven't done the analysis on this yet, but right here, sitting midway in between, that might prove good. And then, of course, again, right, if we just wait for the pullback here, here's where we would buy a call, and up here is where we would buy a put. So that's Netflix. Taking a look at Tesla. Okay, so right here we had a trade with Tesla here. Here was our demand zone. Here was a return to a demand zone, and then right here was where we got out. If we go back in time, here was our demand zone right here, a rally, a base, and a rally there. Okay, that was a very clear area of consolidation. And then this actually came out, didn't come out with a great deal of energy, but the fact that this then ran, there was there was the potential for this to still work, even though we generally prefer to see much greater energy like that. So there was this pause in here for about a week, and then it kind of raced from there. So we ended up this was a short duration trade here. So we ended up buying a call and then getting out right here at that area of consolidation right there. So right here, this is where we are now. Obviously, this is a long way up here for the supply zone on Tesla. And then down here, though, and we probably actually would not take this again. So in fact, there's nothing here. And then lastly, taking a look at NVIDIA, we actually had a nice trade on this, where we actually sold we sold premium here. And so let me just turn this into a 2-hour chart here, because this is what we based the trade off of. So right here, we had this drop, base, and a rally here. Given that it's a really expensive stock, we opted instead of buying an option or even doing a debit spread, we ended up selling premium here. Okay, so we ended up selling this out, and let me just see if I have this in here. So here's the option that we ended up selling here. So we ended up selling, and this in fact expired today. But at the time when we got into this trade back here on the 11th, we ended up selling the bull put vertical spread. Okay, and we ended up selling the 830 put, and then bought the 820 beneath. So we ended up collecting $4.25 of premium, which of course would mean that our max loss would be $5.75. So it was a little less than obviously not a one-to-one trade, but basically we stood to make four and a quarter if we managed to actually stay above the short strike. And of course, if things did not go well, we would have lost a max of $5.75 based on $10 minus the 4 and a quarter premium collected. So what originally happened was this thing immediately popped, I think the next day, or there were 2 days from after we got into this. So immediately, this thing basically dropped to about 2 and a quarter on the credit side. So that was a pickup of $2. So after 2 days to pick up close to 50% on this trade, I thought it was the responsible thing to at least take a piece of this trade off. So in fact, I took half the position off at 9.13 here, and that was a $2 gain, which was 47%. At which point it immediately pulled back. to this zone. But obviously, I was not thrilled to see this at all. Having said that, a huge part of this trade, of course, is the time decay. So this thing, of course, was the time was eroding on this, and of course, it did come back to this demand zone, which could still certainly work again, and in fact, it did. But you can see when it pulled back to here at 852, it was still about $22 above the short strike. So there was still a reasonable distance there. And then after that, it just kind of rocketed out of there. And so today, it expired worthless up here, since obviously this is a long way from the short strike. So on the second chunk of the trade, I managed to obviously this expired worthless. So this was managed to collect the full 4.25 that was originally received on the credit side there. So that's the story with NVIDIA. Right now, there's really no, there's what I'm looking at on NVIDIA is this here over here, right here in the 1 hour or in the 2 hour chart or 1 hour chart. We can see there's a clear drop, base, and a rally there. So within here, this would be another a place where we could have a bullish trade here. So right here. Here's where we are, and if we just look at the distance that this thing would have to go, this would have to drop so that's about a 6% drop from where we are now to get back to here. So, but that's what we'll be looking at on NVIDIA here. So this thing would have to drop from about 940 to right about here, which is around what is that, about 80, 89 or so. So that's the level where we'll be looking at on NVIDIA. All right. So at any rate, that's what I got here. Again, if you would be interested in learning more about the whole supply and demand concept, there is that link in the description field of this video. You can certainly click on that, and I'd be delighted to speak to you about using this principle to set up profitable, high probability controlled risk trades. So this is Mitch Firestone with Precision Trading Labs, and I will see you next time. Thanks very much. Bye-bye.